Most home office deductions get denied. Here is why and how to make sure yours is safe. Proverbs 22:3 says, "The prudent see danger and take refuge. The simple keep going and pay the penalty." The home office deduction is one of the most misunderstood deductions in the entire tax code. Thousands of business owners claim it every year, and thousands of those claims get denied, not because those owners were dishonest, because they did not know the rules. Today, I am going to make sure you know them. Hi, I am Maya. I am a tax strategist. Well, yes, this is my digital Maya tax strategist avatar. I created a virtual version of myself so I can show up more online and still give my real time to the people I work with and to my family. But everything you hear from me is genuinely me. I do all the research, all the writing. I read every comment. I answer the messages. I review every single video before it goes out. This just lets me help more business owners without burning out trying to be everywhere at once. So now that you know that, let us get into something that could save you thousands of dollars this year. Today, I am going to walk you through exactly why most home office deductions get denied, and exactly what you need to do to make sure yours is completely safe. Here is the context you need first. The home office deduction is one of the most valuable deductions available to self-employed business owners. It can reduce your taxable income by thousands of dollars every year, but the IRS has very specific rules about what qualifies. And most people who claim this deduction are not following all of them. The IRS knows this, and that is exactly why this deduction is one of their most common audit triggers. So let us go through the rules one by one and make sure your deduction is bulletproof. Rule number 1, the space must be used regularly and exclusively for business. Both words matter. Regular means consistent, not occasional, not sometimes. If you work from home 3 days a week every week, that is regular use. If you open your laptop at the kitchen table once a month, that is not. Now, exclusive is where most people fail. Exclusive means no personal use at all. That corner of your living room where you also watch TV does not qualify. The IRS does not care that you mostly use the space for work. Exclusive means exclusively. That corner of your living room where you also watch TV does not qualify. The IRS does not care that you mostly use the space for work. Exclusive means exclusively. Rule number 2. Not everyone can claim this deduction. If you are a W-2 employee, meaning your employer sends you a W-2 at the end of the year, you cannot claim the home office deduction. Period. This changed in 2017 with the Tax Cuts and Jobs Act. Remote workers, employees working from home full-time, none of them qualify for this deduction under current law. If you are self-employed, meaning you own a business, file a Schedule C, or have an LLC, you can claim this deduction. But only if your space meets the exclusive use rule I just explained, and only if it is your principal place of business or a place where you regularly meet clients. The key word is dedicated. Before I walk you through exactly how to calculate this deduction, I want to make sure you know about the Contractor Tax Toolbox. It is my complete collection of guides, calculators, and checklists for everything I teach on this channel. The link is in the description below. Go grab it now. And stay with me, because the calculation section is where most contractors find money they did not know was available to them. There are 2 methods to calculate your home office deduction. Method 1 is called the Simplified method. You take the square footage of your dedicated office space, multiply it by $5 per square foot, up to a maximum of 300 square feet. So the maximum deduction using the Simplified method is $1,500 per year. Clean, simple, audit-friendly. Method 2 is the regular method. This one takes more work but can produce a larger deduction. You calculate what percentage of your home is used for business. If your home is 2,000 square feet and your office is 200 square feet, your office is 10% of your home. You can then deduct 10% of your home expenses, mortgage interest or rent, utilities, insurance, and maintenance, but it requires documentation. Keep every utility bill, keep every insurance statement, keep records of every repair. Rule number 3, documentation. If you are going to claim a home office deduction, you need to be able to prove it. Here is exactly what to keep: a photo of your dedicated office space, the square footage measurements, 12 months of utility and mortgage statements if using the regular method, and a brief written description of how the space is used exclusively for business. Luke 16:10 says, "Whoever can be trusted with very little can also be trusted with much." Documenting your deductions is faithful stewardship. It is wisdom. Proverbs 22:3 says, "The prudent see danger and take refuge, but the simple keep going and pay the penalty." The home office deduction is not complicated, but it is specific. You now know more about this deduction than most business owners who have been claiming it for years. If you are ready to make sure every deduction you claim is protected, grab my Contractor Tax Toolbox from the link in the description. Share this with one business owner in your life who works from home. I am Maya Slivkov. Stay wise, stay strategic, and keep building wealth God's way.